Welcome to the Deep Dive. We sift through the reports, the research, and we try to boil it all down into sharp, useful insights just for you. Today, we are plunging right into PepsiCo. We're unpacking their 2024 annual report. Our goal, to give you a really clear, concise picture of this global giant, its operations, its finances, its strategy, and crucially, how they plan to deliver value back to shareholders, like you. Reading through this report, the word that just kept jumping out at me was resilient. 2024 was, well, it wasn't exactly smooth sailing for global businesses, was it? But PepsiCo, they didn't just stay afloat, they actually grew. We're talking 2% organic revenue growth and a pretty impressive 9% growth in core constant currency earnings per share. They actually beat their own guidance.
Yeah, that EPS growth is notable.
And it's their fourth year straight meeting or beating those EPS goals. Plus, if you look back 5 years, net revenue is up 37%, almost $92 billion. Core EPS jumped 48%. I mean, those are strong numbers.
They absolutely are strong. And what's really interesting, I think, is how they managed it. This wasn't luck. The report paints a picture of a, frankly, complex external environment. You had ongoing supply chain snags, you had persistent inflation, consumer tastes constantly shifting.
Right, and intense competition.
Exactly. Plus e-commerce booming, geopolitical instability, new regulations. It was a minefield. So what we'll unpack today is how PepsiCo navigated all that. It really comes down to their diversification, their agility, and a really clear strategic focus.
Okay, so how does a company this enormous pull that off? It must start with their structure, right? Their global footprint. Let's get into that operational backbone. They have 7 main segments: Frito-Lay North America, Quaker Foods North America, PepsiCo Beverages North America, then Latin America, Europe, AMESA, that's Africa, Middle East, South Asia, and APAC, Asia Pacific.
Quite the spread.
It is. And there's a big change coming in 2025 for North America. They're combining Frito-Lay North America and Quaker Foods North America into one segment, PepsiCo Foods North America.
Streamlining things.
Exactly. The idea is to connect better with consumers, leverage their scale more effectively, cut down on duplication, and just generally optimize how they get products to market. Smarter and more customer-focused in their biggest region.
Makes sense. And while they're doing that consolidation in North America, you really see how vital their international business is. I mean, $37 billion in net revenue from international in 2024. That's what, 40% of their total revenue? And almost 40% of their core operating profit mix, too.
Well, that's huge.
It really is. And that international side has seen about 10% compound annual growth in core operating profit over the last 5 years. It just underlines that PepsiCo is definitely a global player, not just American.
40% is massive.
Yeah.
And the report mentions this vast runway for growth, right? They're in global beverages and convenient food. That's a $1.3 trillion market opportunity globally. But here's the stat that really grabbed me. About 60% of their current business comes from places with only 5% of the world's population.
Think about that.
Yeah. So flip it around. There's potentially huge expansion room in areas covering the other 95% of people. How does that feed into their strategy?
Well, that potential directly fuels their 4 main strategic pillars. That's where they focus their energy and investments. First pillar, evolving the portfolio to always win the consumer. This isn't just, launching a new chip flavor. It's about reshaping what they offer. Think positive choices, more no-sugar drinks, more whole grains, pulses, and foods, and adding functionality, like that Gatorade hydration booster, for all-day hydration without artificial stuff.
So meeting health trends head on.
Precisely. It's about staying relevant, maybe even ahead of regulations, and that global shift towards health consciousness. They're also hitting portion control mini cans, smaller packs. Then customization is big SodaStream, obviously, but also their Gatorade and Propel powders. That powder business is $1 billion in the U.S. now.
$1 billion, just from powders.
Yep. And they're not forgetting the classics, tweaking Lay's classic for less sodium. Plus, smart moves into multicultural markets, growing Sabritas, buying Seat Foods, and even getting creative, like showing Europeans how to make a potato omelet with Lay's. It shows they're really watching how people eat now.
Okay, that portfolio evolution makes sense.
Yeah.
But you also mentioned they're transforming internally. That's the PEP Plus and modernization part.
Exactly. Let's start with PEP Plus PepsiCo Positive.
Right.
This is more than just a slogan. It's their whole strategy for sustainable growth. It touches everything, supply chain, the products themselves, supporting their people, their business globally.
And they highlighted some big wins for PEP Plus in 2024, didn't they?
They did. Regenerative agriculture was one. They launched this climate resilience platform with partners.
I saw that Fast Company called it a next big thing in tech.
Yeah, because it's practical. It gives farmers real tools and insights to deal with climate change, boost their yields, and lessen environmental impact. That's a powerful combination.
A win-win.
Truly. And water sustainability, too. They actually hit their 2025 goal for water efficiency in high-risk areas a year early and beat their agricultural water efficiency target 2 years early.
That's ahead of schedule. Impressive.
It is. And on packaging, they're pushing recycled plastic, RPET. Now in about 60 countries, there's at least one PepsiCo product using it. These aren't just PR moves. They're about resource security and meeting what consumers and regulators expect long term.
It seems really integrated. And this PEP Plus lens applies to new products too.
Absolutely. Beyond the Gatorade booster, look at Brazil. They launched an oat rice, higher fiber, plant protein, and the profits go to fight food insecurity.
That's interesting.
And acquisitions fit too. They bought the rest of Sabra, netting a nice gain. And then early this year, the $1.2 billion C-Hate Foods deal, boosting their better for you offerings.
So PEP Plus connects directly to the modernizing the company pillar then.
Yes, they feed each other. Modernization is about investing in digital platforms, simplifying IT, standardizing how they work globally. A big part of that is their global capability centers. The idea is to avoid doing the same work twice, use their global scale better, centralize data. This helps with sharing knowledge, being more agile, getting products out faster, executing better, and ultimately cutting costs.
And this led to record productivity in 2024.
That's what the report says. Driven by things like more automation in plants and warehouses, smarter transportation logistics, and just a relentless focus on managing costs and reducing waste. These aren't just abstract goals, they're direct answers to those challenges we talked about. Supply chains, inflation, competition. It frees up cash to reinvest in growth or absorb cost hikes.
And it's ongoing.
Very much so.
Well,
They've actually expanded their big multi-year productivity plan out to the end of 2030. It's a huge commitment, something like $6.15 billion earmarked for finding more efficiencies.
okay, strategy, operations, sustainability. Let's talk bottom line. How did all this shake out financially in 2024? Consolidated net revenue hit $91.85 billion. That's up just slightly from $91.47 billion the year before, but still up.
Right, modest top-line growth.
But operating profit saw a nice jump, up 8% to $12.89 billion. And the actual profit, net income attributable to PepsiCo, grew 5.5% to almost $9.6 billion. And earnings per share, diluted EPS, was $6.95, up 6%. Solid increases pretty much across the board.
They are solid, but it's worth looking underneath. For instance, their organic revenue performance, that non-GAAP number adjusting for currency, M&A, et cetera, was 2%. And that 2% was mainly driven by a 4% price increase, which had to offset a 2% drop in organic volume. So pricing power was key.
So they sold a bit less stuff, but charged more for it.
Essentially, yes, on an organic basis. And digging into the segments gives even more color. North America, Frito-Lay, Quaker, beverages faced some struggles. Quaker especially took a big hit to revenue and profit because of that big recall. Lost sales, recall costs, though insurance helped offset some of it.
Yeah, that recall was major news.
It was. And PepsiCo Beverages North America also saw volumes dip, though pricing helped there too. Both segments also mentioned higher costs and some one-off charges affecting profit.
Okay, so North America was a mixed bag, leaning, challenging. What about internationally? You said that was stronger.
Much stronger, generally. Europe was a standout. Net revenue up 5%, but operating profit shot up 163%.
163%. Wow. How?
Well, good pricing and volume growth helped, but a big factor was lapping some large impairment charges from the previous year related to the Russia-Ukraine conflict and some brands there. So part of it was costs not repeating. Still solid underlying performance in Europe for both snacks and drinks.
Okay, that makes sense.
Asia Pacific also had strong profit growth, productivity, volume growth helped there. AMESA showed resilience despite currency headwinds and higher commodity costs. It really shows the benefit of not having all your eggs in one geographic basket.
Diversification paying off. What about the balance sheet and cash flow situation, just briefly?
Looked pretty solid. End of 2024, total assets close to $100 billion, liabilities around $81 billion, leaving equity over $18 billion. And importantly, cash from operations was strong, $12.51 billion for the year.
Okay.
And that feeds into something they emphasize, free cash flow. It's a non-GAAP metric, basically cash from operations minus capital spending. It's crucial because that's the cash they use for acquisitions, paying down debt, and most importantly for investors, paying dividends and buying back shares.
And they plan to keep returning that cash.
Absolutely. The report signals confidence in continuing to generate strong free cash flow and return a significant portion to shareholders. That's a positive signal.
Which brings us right to shareholder value. How are they delivering that directly to you, the shareholder?
First off, dividends. I mean, their record here is incredible. They've paid a quarterly cash dividend every quarter since 1965.
That's nearly 60 years. Quite a streak.
It really is. And they're not just maintaining it, they're increasing it. Just this past February, they announced a 5% hike in the annualized dividend. It's going up to $5.69 per share from $5.42. Nice bump.
That increase takes effect with the June 2025 payment, so that's direct cash returning to shareholders.
Definitely. And dividends aren't the only way. They're also active with share repurchases or buybacks. For 2025, they're planning to buy back about $1 billion worth of their own shares.
Okay.
This is part of a bigger plan. They still have $6.5 billion left under a $10 billion authorization from back in 2022, which runs until early 2026. Buying back shares reduces the number out there, which can help boost earnings per share for everyone else.
So add it all up, dividends plus buybacks. What's the total return picture for 2025?
They expect to return about $8.6 billion total to shareholders this year. That's roughly $7.6 billion in those dividends we talked about and the $1 billion in share repurchases.
$8.6 billion. That's a serious commitment.
It absolutely is. And it signals management's confidence in the company's financial health and its ability to keep generating cash consistently. It's a core part of their capital allocation strategy. They also track something called Core Net Return on Invested Capital, ROIC. It was 20.4% in 2024. Basically, it measures how effectively they're using invested money to generate profit. A number like that suggests pretty efficient capital management.
Okay, so putting it all together, looking for it, what's the vibe from PepsiCo? How do they see the path ahead? The CEO's letter sounds confident, talks about beloved brands, talented team, advantage capabilities. Basically, they feel they have the right strategy and tools to grab growth opportunities. And they keep coming back to those four pillars: evolving the portfolio, expanding availability, modernization, and winning with PEP plus cuts.
Yeah, and I think that focus is key. Continuing to shift the portfolio towards health, function, customization, pushing into new geographic areas, leveraging technology through modernization, and deepening that sustainability commitment with PEP plus Any. These aren't just nice to haves. They seem essential for navigating what's next and really tapping into that huge global market potential. Now, they are keeping an eye on risks, of course. Geopolitics remain volatile, inflation could stick around, consumer views on things like ultra-processed foods or even the impact of weight loss drugs are evolving.
Right, new challenges always pop up.
Exactly. And regulatory changes like potential taxes on ingredients or stricter packaging rules. But PepsiCo's adaptability, their scale, and that diversification we discussed across products and regions, those are their big shock absorbers. It makes them, as you said at the start, remarkably resilient.
Resilient seems like the right word. It's a constantly changing landscape out there. So let's end with this provocative thought for you to chew on. Considering PepsiCo's huge commitment to winning with PEP Plus and that massive opportunity in the 95% of the world population where they're less present, what surprising, totally new product or maybe market strategy could be their next big aha moment? Something maybe even beyond just drinks and snacks. And that wraps up our deep dive into PepsiCo's 2024. We looked at their resilient performance, unpacked their growth plans, and saw their clear commitment to shareholder returns.
Yeah, hopefully it shows how much insight you can get from digging into these annual reports.
Yeah.
They really tell a story about how these big companies operate and plan for what's ahead.
We hope this gave you a useful shortcut to understanding PepsiCo better. Definitely mull over that final question. Maybe even let us know your thoughts. Until next time, keep exploring and keep learning.